Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Wednesday, February 9th. It looks like stocks on Wall Street may pull back a bit today, following an impressive run-up that pushed the Dow Industrials and S&P 500 to their highest levels in more than 2.5 years. China and Hong Kong led Asian stocks lower, as investors there got their first chance to react to yesterday's interest rate hike by the People's Bank of China. The markets had been closed for the week-long Lunar New Year holiday. And in Europe, the major averages are mostly lower. An 8% jump in shares of the London Stock Exchange is failing to lift the FTSE 100 into positive territory. The LSE is merging with Canada's TMX Group to create the world's largest stock exchange in terms of the number of companies listed and number 2 in the value of those companies, behind NYSE Euronext.
Here in the U.S., the corporate earnings season rolls on. The biggest name out with results this morning is Coca-Cola. Its fourth quarter net income nearly quadrupled from a year ago, and revenue rose to well over $10 billion. The numbers were roughly in line with expectations, and Coca-Cola shares are rising about 1% in the pre-market. Another stock winner today is Walt Disney. After Tuesday's closing bell, the entertainment and media giant reported a 54% jump in quarterly profit. Disney credited strong advertising revenues at its TV channels, including ABC and ESPN, and solid home video sales of Toy Story 3. Following the report, Wunderlich and Atlantic Equities both raised their ratings on the stock, which is jumping nearly 4% in the pre-market.
One of today's biggest gainers is likely to be Take-Two Interactive Software. The video game producer blew away Wall Street estimates thanks to strong sales over the holiday shopping season. The maker of the Grand Theft Auto franchise also had success with its basketball game, NBA 2K11, and the first-person shooter, Red Dead Redemption. Shares of Real Networks are also higher. The software company announced that it will cut about 130 jobs, or about 10% of its workforce, as part of a restructuring plan. Real Networks said the move will cost about $3 million in the current quarter, but save the company $11 million annually. Staying in the technology sector, Apple may see heavy trade today after the Wall Street Journal reported that it has begun production of a new version of the iPad tablet computer. The new iPad reportedly will include a faster processor and will be available through AT&T and Verizon Wireless.
Among other stocks to watch today are Ingersoll Rand, Northrop Grumman, and Polo Ralph Lauren. They're all out with earnings. Meanwhile, 3M is raising its first quarter dividend to 55 cents a share, and its board authorized a new $7 billion stock buyback program. Not much on the economic calendar today, so investors will be focusing on Capitol Hill, where Federal Reserve Chairman Ben Bernanke will go before the House Financial Services Committee later this morning. It's his first appearance before the new Republican leadership, and the title of the hearing suggests he may face tough questions. It's called, "Can Monetary Policy Really Create Jobs?" That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.